Okay, so we're recording. Thanks everybody for joining our webinar on maximizing asset revenues. We're going to cover a few things here today. If you're in Texas, hopefully you are staying warm and dry. And if you're not, hopefully you're warm and dry soon. Marissa, if you can let me know. I think
I can see it.
Everything looking good? Awesome.
Yep.
Okay, great. So here's what we're going to cover today, folks. For those of you that are unfamiliar with the Otso program and myself and our team, we're going to go through a little bit of that. But most importantly, we're going to spend a lot of time talking about the difference between Otso and the status quo and how it can really help you as a leasing professional, close more deals and ultimately reduce risk for your client on the landlord side. There's definite benefits for the tenants, so we're going to discuss those briefly as well. Really want to focus today, primarily this webinar, on the landlord and the leasing professionals that exclusively represent landlords. So just kind of diving right into it. Like I said, we'll spend a teensy bit of time on background, but really want to frame the problem from an ownership perspective today. Obviously, as a commercial broker, it's essential for your clients to be successful, for you to be successful. Brokerage is the ultimate service business. It's about advisory, it's about execution, and it's about strategy. And so hopefully at the end of today's webinar, or in talking with us, viewing our collateral, you'll get a better sense of how we can help you do that. We're going to talk about underwriting and risk and some of the challenges associated for landlords on that. Most brokerage professionals aren't responsible for doing that directly, but if you are, I think this will be really relevant for you too. And lastly, we want to talk about the benefits for brokers and why it makes sense now to engage your clients and reduce this. And so just super quick on me, I spent 15 years as a commercial broker. Now I'm a commercial owner here in Houston. I work for a boutique firm here in Houston for roughly 13 years before transitioning into pure ownership and tech entrepreneurship. Did a ton of tenant rep for my first 5 years, spent the last 7 doing mostly vertical developments for our partnerships. I was fortunate enough to buy myself some freedom. I did 30 or 40 of those. And then the team was, kind enough to dig up a picture for me from the, late 2000s where I was much skinnier. So anyway, Otso is directly a result of problems experienced on the ownership side. And so quickly, we're not going to spend a ton of time on this, but we did a big study with Resquare that you might have seen us launch, talking about the sentiment for leasing volumes at the end of the year last year. And of course, 2020 was a huge down year with COVID. Some of this has probably shifted, but I think the metrics are still generally true. Industrial strong, no question there. We're probably exceeding leasing sentiment now. On the office side, definitely the hardest hit, although we do see a huge appetite, and certainly among our brokerage partners, for people returning to the office. But there is sort of a fundamental shift in flexibility and trends. We'll get into that. And lastly, on retail, I actually think this has probably improved the most. There's a huge pent-up demand for people to get out of the house and do things. Any retailers that have survived this previous year are probably set up to do really, really well. And of course, it's the tenant market going forward. Let's talk about ownership, really, because that's what Otso is all about, is improving things for owners. The market has really shifted over the past 10 years. Prices have stayed the same or gone up. And so cap rates continue to sort of trickle down in all asset classes. Whereas if we look at the ownership costs, I'm not sure how familiar you are with Texas, but our appraisal districts and taxing entities have gotten much smarter in the past 10 years. I can remember when I got into the business, the gentleman who would appraise my properties had one tooth and it would take about 5 minutes. Now they have a team of people and all the data you could ever ask. So commercial property values continue to increase. Landlords continue to fight with the taxing authorities over that. And then insurance costs, because the values have gone up, continue to increase as well. As we're literally seeing this week, extreme weather continues to play as well. So what does that mean? Well, prices are higher, and it costs more once you own these assets. So that creates an environment where it's difficult. We're trying to squeeze blood out of a stone in some cases on some of these recent purchases in the past couple of years. Now let's talk about leasing. Where are we headed from a leasing perspective? As discussed, we think that the tenants are going to be in control for the next 18 to 24 months in almost every asset class except pure industrial. And for landlords, and again, this problem from Otso really came from a landlord perspective, it's just very hard to assess the credit worthiness of small to mid-sized businesses. For you on the brokerage side that take a role in this process, or you do it on your own for your own assets, you understand this problem very well. With a small and mid-sized business, they're going to provide you what they've got. And that might be a P&L, that might be a QuickBooks printout, that might be a couple months of bank statements, that might be a business plan or a sources and uses document. Ultimately, the sources are unaudited, and typically they can be manipulated. Not to say people are trying to, do anything untoward, but it's typically not the same as, a company that's got 10 years of history and that is really kind of leaning in with a CPA that's auditing their financials on an annual basis. Bottom line is there's really no commercial lease default rate tracked across all property types. And so the best information we have available is really from the SBA. And some of this data is skewed because hotels are included in this number. But they do a lot of restaurant deals, a lot of retail. That is your average SMB in the United States, of which there are 30 million. And out of those 30 million, 7 million are growing. But if you look at the 13% default rate, that's over a 10-year period. That's for an average loan size of about $150,000. And so if we were to just extrapolate that, to your commercial property, that means, roughly 1 to 2 out of 10 deals that a landlord does in a small and regional partnership is going to have not only vacancy, but defaults. And we'll get into this, but defaults hurt. And just quickly on tenants, real estate obviously is one of their largest costs. We did a huge survey last year, of which 95 was really closer to 99. 99% of businesses were concerned about working capital after COVID. It was, sans a few industries, it was a brutal year. And then on the office side in particular, we expect to see a reduced footprint. Some of that is trend and some of it's cyclical, and, the way we use space, and some people are going to work from home. We believe internally here at Otso, it's more about the economic environment, just the fact that companies have had to make layoffs and make trims and cut costs. And that certainly impacts commercial real estate as a sector, both office and flex. And here in Houston, we're obviously very dependent on energy prices. And there are bright spots in the sector. Point being here is that if you are a tenant and you are looking for space, you're going to have a commanding position in most markets in the United States. And so, we've got a sort of a amalgam of issues here for owners, rising costs just to operate the property, vacancy hurts, defaults hurt worse. And really this is what Otso is built to solve. The upfront costs in a lease, commissions, which we love brokers. I was a broker for a long time. Those commissions are big numbers though, and they're taking an upfront cost for a landlord. There's a big risk there. And then TI. So you're putting in a lot of money into a space, especially if it's second generation. And unfortunately, if you experience a default in the next 2 years, you're spending that money again. You're releasing the space, so the commissions due again. And probably the space isn't perfect for the next person. That's very, very rare. In our market here in Texas, typically for call it a 3 to 10,000 square foot office, industrial, retail lease, you're going to see 1 to 2 months in cash as a securitization. There are exceptions, Austin being one of the strongest markets. Landlords can command some additional securitization there. And that's typically done in cash. And so again, this isn't to say this is every deal, but on average, in our experience, this is what we typically see. And this is true in most markets. Not necessarily the exact numbers, but the fact that the risks of leasing, the costs of leasing greatly outweigh what landlords are able to collect and negotiate to reduce their risk. And so really what we're going to go through today is, how do we sign leases that are really truly better for everyone? That's one of our missions at Otso. We want a better leasing process. We want better leases that fairly assess tenants and give them the strength and creditworthiness they deserve if they are strong. And then we want landlords to make better decisions in a quick, efficient manner. We don't want them to have to, really groan and worry about who they're leasing to and take on additional risk without having the information to be able to make the decision. And then ultimately, it's about balancing risk and liquidity. So for tenants, there's almost nothing more wasteful to a business than locking up tens of thousands of dollars in a cash deposit, or God forbid, a letter of credit or a bond for multiple years at 0% interest in a hyperinflation environment. Not to break into the economics of the situation, but that's kind of where we are. And lastly, for brokers, you're seeing a lot of CRE tech commercial real estate tech come out that makes our lives easier. But being able to leverage solutions that collect information faster, that share data more efficiently, and allow you to close deals faster. That's one of our big missions. We want the process to be smoother and faster and easier. So let's get into what Otso does. At our heart, Otso writes corporate guarantees on behalf of prospective or current tenants who are looking to occupy commercial real estate. Our guarantees are good for the life of the lease. They cover every instance of default that the underlying lease does. You're happy we can send these documents out. But if you ever look at one of our guarantees, it's actually really simple. It basically says tenant performed, and it points to the underlying lease. And that gives us a lot of flexibility at Otso in being able to serve our landlord customers effectively, because every lease is a little bit different, but they typically all have some level of monetary, non-monetary, and post-leasehold condition defaults. We were able to cover all of those. So that's really, really important. But program just, at its face value, if we're able to make an approval, the tenant is able to keep their cash and they pay a small premium, which we will get into how that works, in their rent. And so it's no additional liability. They're not opening up a loan. There's no borrowing or hurting their credit capacity. The only time that would come into play is in a default. We're happy to work in whatever the landlord needs for securitization. So that could be TI, that could be commissions, that could be overages in TI. That could be 4, 6, 8 months of rent. Usually our customers are averaging 200 to 300% more in our guarantee value, sort of what we'll cover, versus what they're able to negotiate in cash. And I'll get into how that works. But that's really the primary benefit of the program for landlords is number one, we're going to bolt on some application technology here that I'll dive into that really helps them make decisions faster with better information. And the byproduct of that is the tenant gets to keep their money. It's an option. And the landlord usually ends up with significantly more coverage. So let's talk about why that underwriting process is so important. We covered this a little bit earlier, but that information, it varies widely. It's generally somewhat unreliable. And if they're smart, if you look at a tax return for a small to mid-sized business, they're driving every bit of income out. So it's very hard to get a sense of, basically a landlord has one question: can this tenant support rent? Are they going to be a good credit-worthy tenant? Are they going to stick with our lease? Most landlords don't go into a deal worrying about a non-monetary default. We're really talking about, can they support rent? And so what's really interesting about Otso is the way we do things and look at things. We operate a lot like a Rocket Mortgage or a SoFi. If you've ever been through an online sort of mortgage application, it's very fast now. It takes 5 or 10 minutes. Usually you can do it all online or from your phone. You're able to just log into things and they pull the information they need. We operate in the exact same fashion. Our application takes less than 5 minutes on average. There's no personal credit required. There's no account creation required. It's secure. It's encrypted. We use a company that's $6 billion company backed by Visa called Plaid. And through our algorithm and our tech, we're able to make same day decisions. So we don't slow you down. If anything, we speed you up. And that's for up to $50,000. And the cool thing is what we're really able to do is part of the process here is that the business logs into their business bank account for a one-time snapshot. And we pull out 730 days of transaction information from that account. And so we get a very, very good sense of the liquidity and the cash management position of this business. And that's what we use as the crux of our underwriting. We do touch Experian's database, so we have a great sense of derogatory marks or risk positions or state liens or bankruptcies or lawsuits. We do hit all that stuff. And trust me, it is important. But there's a big gap on what SMBs, if you're not sort of operating trade credit, buying a widget and then paying it back, if you're not doing that consistently, then Experian doesn't have a ton of information on you. You can have 10 years in business, and I see it every day, and there may not be a lot of information in Experian's database on you. You may be a super strong tenant, but that leaves landlords wholly uninformed, even if they did run a credit report, which many don't. So our report is unique in the sense that we're able to deliver that information to landlord and say, look, this tenant's strong. They carry many, many months of rent on hand, and they've done it for years on a consistent basis. And that really just greases the skids for a deal. So here's how it works for landlords. It's an option, by the way. So signing up for Otso is free for your landlords. Running the reports is free, at least in the next 30 days if you sign up your clients. And we're happy to hop on a call with any of your clients, whether landlord or tenant, or anyone from your team as well, just so you know. But it's an option, meaning that the way most landlords use us is once their properties are onboarded, we assign a secure encrypted link to that building. Let's say it was 123 Main Street, and potentially a tenant would come through. Let's say they tore Suite A. They're going to tour Suite A and tell that broker, you in this case, hey, I'd like a proposal. I really like this space. I'd like to make a deal. Most of our customers and leasing teams basically say, great, before we get all the way down the road on the deal, go fill out this link. Again, it takes them 5 minutes, no personal credit, and it allows the landlord, before we all spend a ton of time on a deal, just to make sure there's a match here in financials. And then in the LOI, if they're approved, we're able to generate a financial report. And most of our customers are quoting us two ways. So, maybe option A is, hey, tenant, write me a security deposit for X. And option B is no security deposit, keep your cash and pay me a little bit more in rent. And what is that little bit? It's pretty small. For every $10,000 we guarantee, our average fee is roughly $60 to $70 per month. We're assigning an interest rate that is pure simple interest between 5 and 8% on average. That is just simply added to the rent. The reason we have it added to the rent and we bill landlords is because we never want the policy to default due to non-payment. And so we do set that up at the landlord level. But again, there's no obligation. The landlord can present it and the tenant can go, no, I have a ton of cash. I'd rather just put the cash up. And then for the landlord, even if we make a decline, it's very important. We're not sharing that decision with your tenant. We're never going to kill your deal. We're going to give you information. You decide. And so, maybe a tenant comes and applies for 50K, what if we see $5,000 in their account? Well, obviously that's not something we're going to back, but that's great information for your clients and as a landlord to be able to go, okay, well, what's going on here? It's a great gut check. And again, it's free. So most of our customers sign up just to get our reports. And then the guarantees, we'll get into how those, really, really look good. And just quickly on the guarantee here, this does not preclude you as a landlord from enforcing any additional remedies in your lease. So you're not subordinate to us on the accelerated rent or any of the other remedies that your lease may require. The only time a landlord is subordinate to us is when we've paid them the claim. And so if they had a $50,000 guarantee and we go pay it, they can go sue the tenant for $1 million. They just can't sue them for the $50,000 we've already paid them. And I'm happy to sort of dive into that. But again, always an option. The idea here is flexibility to reduce friction. So let's jump into a deal. I talked about this earlier in our risk management situation, but landlords do take on enormous risk in the first years of a lease, especially in an environment like now, where again, it's hard to assess these tenants pre-Otso. If you have Otso, you're going to feel better about it. But if you didn't have it, you're stuck with bad information or limited information at a minimum, and you're writing big checks. So here's a typical deal in Houston. Let's say it's a 5,000 square foot office deal, and the rent's roughly $12,000 a month. So this is not an expensive building by any means, but these are typical allowances. Landlord might be putting $15 a square foot in a second generation space. Maybe they're moving a few walls. Maybe they're putting some carpet in, maybe they're redoing the doors or some electrical upgrades, whatever it may be. They're going to pay a commission on a 5-year deal. That's going to be 6 points. And here's what they're collecting for a cash security deposit. They're going to get $12,000. That's, especially in this environment, the tenants are dominating. Maybe they get 24, but they're going to, a good broker on the tenant rep side is going to sort of force them down and say, look, we're going to put up 1 month security deposit at your building. You take the risk. And again, the lure of a deal for a landlord, there's no magic to commercial real estate. Most real estate is valued, and I think rightly so, on income. And so that income is essential. How do we get the income? We got to rent. And so there's a huge motivation for landlords to make deals. But really the illustration in this slide is simple. We got a big TI allowance here. We got a big commission, and we got 1 month to cover us. So we're almost, we are. We're $106,000 short if we see a default here. Really the first year. In most leases, you'll find, especially in these larger deals in major markets, that landlords don't start to break even on deals, in a 5-year deal, almost at the midpoint. And so, we've got to remember as brokers and people that represent our clients, this stuff is expensive. And, although they want to get a deal done, these are the things that they're weighing in their minds. And so let's talk about Otso. How would Otso be used in this situation? So it's the same deal economics. If it was a 5,000 square foot lease and the rent is $12,000 a month, let's say we were able to approve that tenant for a $50,000 policy. The cost of that policy on average for Otso would be $300 more a month in rent. And again, let's just assume the tenant has chosen and said, look, I want to keep my $50,000 here because the landlord has told them, look, this is a security deposit. I need to do a deal. And normally they never get that 4 months of cash, in hand. The landlord, the tenant's going to say no to that. However, in our example here, what we're doing is framing it It's an option. So we tell the tenant, look, either write me a check for 50 grand or no check, and it's $300 a month. And I will tell you from our experience, about 85% of tenants that get approved choose our program. They would much rather keep the liquidity and share that risk with us going forward. Now let's talk about it from a landlord perspective. That's what this is about. Again, that deal cost the landlord 118 grand in commissions and TI to put somebody in. Well, now if there's a problem, they have a $50,000 policy. So just do the quick math on that. That's roughly 400%, a little bit over 4x coverage against default. And again, that guarantee is an exhibit to the lease. It's co-signed by tenant and landlord and us. It sits and it is good for the primary term. And the cost of that policy to work that in was only $300 a month. And so that's why Otso works so successfully. It is a low nominal fee. It is early in the negotiation, so it doesn't feel like a retrade. Again, it was at the the LOI stage here, and so the tenant has chosen, and so there's no friction on this stuff. They actually feel good about it because they've been approved. Landlord had better information in this case too, because we ran both a financial report, and if we back them, that means that they've got a significant amount of cash on hand. Just period. There's no rocket science to our algorithm, although we like to think there is. The biggest crux of it is cash and cash management. We want to see a lot of it. We want to see it on a consistent basis. And so I just want to hammer this home. 4x coverage for $300 a month. That's a $50,000 policy versus a typical deal where they'd have 12 grand. The cool thing is we have some landlords, because we don't share that financial report directly with the tenant, that are able to sort of, put some alpha on these fees as well. Remember, the landlord is only responsible for the fee that we outline in our report. And so, this is a good chart here that kind of goes through an example. Maybe our guarantee, if it's $1,000, is only $7 a month. Well, $7 is nothing, right? What if the rent's, $1,000 a month? Maybe they can get $20, right? On a $10,000 deal, maybe they can get $100. On $50,000, maybe they get $500. And you can see you're free to negotiate the cost of this. And of course, the tenant's going to push back. You quote them 12 grand, they're going to say 10. But now you're doing it inclusive of a cost that is covering your client 2, 3, 4, 5 times. We have customers that are executing guarantees 9x on what they would typically collect in cash. We just did one the other day. It was a $20,000 guarantee. The rent was $2,400 a month. That is a massive amount of coverage that landlord would never have been able to collect without using the power of Otso. And you know what they're paying? $175 a month for a $20,000 guarantee. So that's exciting. Oh, and by the way, he's charging the tenant $250 a month. And so that's the example here is, when the landlord controls the negotiation, the broker controls the negotiation, that doesn't change with Otso. You guys set the market for every single deal. And so this is really what gets me excited as a landlord, and I'm using this right now. So the market is just starting to prove this out. Well, let's talk about building value. For those of you that have sold buildings, you're very familiar with how income works and cap rates are structured. And so net income and cap rate is primarily the value, unless there's land or something special about the building or something else that's sort of out of market. But in a typical market deal, it's about net income. Security deposits, we don't put in a cap rate on that stuff. So if you sold a building that had $50,000 security deposits, you'd go to the title company and they'd generate that little report at closing, and your sheet would say, okay, well, you're going to transfer this $50,000 of value and you're going to pull it out of your account, essentially escrow it, and it's going to transfer to the buyer. Well, there's nothing to that. There's no alpha on it. There's no interest rate because it's 50 grand. There's no, if anything, it's not income. It's really the tenant's money. And so you're strictly just transferring it over. But the cool thing is with Otso is over time, if you start to transition your client's leases, your landlord leases, over to Otso, you're going to end up, as I described, with more coverage against default. So imagine going to sell a building after 3 years and you transitioned a significant amount of leases to Otso. Well, maybe each guarantee is just 2x. Maybe you had 1 month in hand on cash deposits, and with Otso, every guarantee you did is 2. Well, maybe that's $50,000 in value. That paper is worth whatever those guarantees say. And so there's a grand argument here that you can sell your building for more money using Otso guarantees. And that math scales. The bigger we get, the more value there is. And just quickly so you know, we do guarantees as small as $3,000 and up to $1 million. And so we can cover your clients. For the larger deals, we do have an enterprise program that we'll talk about. It's a little bit different. Ping us after, shoot us an email if you've got a bigger deal that's sort of bigger than 100 grand, and we can walk you through that. So, I don't want to spend a ton of time on this because we don't really feel like they're competitive to us. What we typically sell against with landlords and leasing professionals is the status quo. It's cash. It's the landlord has collected cash. They want cash. They're not supposed to use it, but they certainly can. And we sell against that sometimes, and that's okay. The landlord ultimately, it's their building, they're going to choose the way they want. But if you were to compare us to a letter of credit or, God forbid, a bond, here's the major advantages. Number one is none of those programs are as fast as us. None of them are going to allow you for free to bolt on our underwriting software to your buildings with little to no impact and enhanced decision making on every prospective lease. I can't understate the value of the underwriting tech that we've built for you. You can bolt on Rocket Mortgage for your building on every commercial deal. Our decision timing is literally, it's minutes in most cases. It's over 50K. It does take us a couple of days, but we're faster no matter what. For $50,000 and below, we're in a matter of minutes generating decisions and reports for you. Cool thing for us, there's no capital requirement for the tenant. So if it's under $50,000, that's true liquidity unlocked. They can go spend that 50 grand. They can go spend that $50,000 on more equipment, hiring, whatever they need for their business. Because a dollar invested in that business is so much more valuable than locked up in a deposit or, God forbid, sequestered in a letter of cash or in a bond situation, which they're paying, again, to sequester their own money. The last thing that's very inefficient about the other products that are out there are that they require both annual audit and annual renewal. And that's very onerous on a tenant. And so this stuff doesn't really make sense for smaller deals, which is the bulk of the commercial real estate market, that 3 to 10,000 square foot flex industrial retail user. That's where we sort of make our bread and butter. And most of these big bond companies or letters of credit that are banks, they're just really not set up to service that type of stuff. And they don't want to. They want to do bigger deals with larger fees, certainly. But we're okay. We have many guarantees that are $2,000, $3,000, $4,000, $5,000. We're happy to do it. The reason we can do it is, one, we're not dependent upon bonds. Two, we're not dependent upon banks. We write things off our own balance sheets and our own insurance partners, and we're able to push things out using civil contracts. So we're flexible, we're fast, we're efficient. There really is almost no comparison to what Otso does. Last thing, I think this is one of my favorite things about the program is, how does it benefit you directly as a leasing professional? Well, really, ultimately, we want your client to make better decisions. A huge part of brokerage is advisory services. They want to know where the market's going. They want to know, is this a good deal? They want to know, should I sign this lease? Any of the information that we provided Otso is going to help them come to that conclusion. Again, reports are free if you sign up your client in the next 30 days. Onboarding is free. Our team handles that. There's no software to learn here. I'd encourage you strongly, get your clients signed up for the program just so you can do that. Lastly, for tenants, it is about essential liquidity, especially in a cash-starved environment like we're seeing. You will see lenders and insurers and credit analysts tighten up after COVID. One of our previous partners, they saw a 675% increase in claims last year due to COVID. And I promise you, they're not writing things like they used to in terms of policies and taking risks. We've all seen this in 08 and 09. We've been through this cycle. We know what a recovery looks like. It's slow. It's a march along. Although I do think economically will get better. But the bottom line is tenants need capital for their business. They don't want to lock it up for years on end at no interest. To me, and this is literally why I use it on my own properties, it's a reduction in risk. I am wholly uncollateralized as a lender, under-collateralized as a landlord in typical leases where I collect a 1-month deposit, even a 2-month deposit. Now with Otso, every single deal we do is 3, 4, 5 months of rent, period. We set this idea of minimum viability for the building. It's really essential. And the last thing here is we do provide this is, brokers, all you have is your time, right? You're out there on commission 99% of the time. We will compensate you for introducing us to your clients when deals are executed. So you go bring on a landlord and over time they execute guarantees. We will share 10% of the net premium revenue with you and your firm. You don't have to take that. We have plenty of brokers who say, you know what, just credit my client. If they rep the tenant, we credit the tenant. If they rep the landlord, we credit the landlord. But it's an additional value to you as a broker because we know how valuable your time is. And like I said, sign up is 100% free, as are the reports. So, if you do it in the next 30 days, we're going to send an email out to follow up with both this presentation recorded and additional collateral information. We'd love to have you. We're onboarding millions of square feet. The program's really starting to take hold. We processed 9 million in applications last quarter. Things are getting rolling. We would love to have you as part of the program. Thank you all for your time. I'll open it up for questions if there are any. Otherwise, if you're in Texas, stay warm and dry, and hope everything else is going well. Great. And I don't know if we've got anybody in the room that wants to ask any questions, but if you do, just let us know. I'm happy to sort of take a few questions here and talk through a few examples. But if you join late, happy to do that as well. Just let me know. Otherwise, if there are questions, I will wrap this up and we will get you an email.
Thanks, Josh.
Awesome. So I think we're okay. I'm going to wrap this up. Thank you so much, everybody, for your time. I'm Josh Feinberg, again, one of the founders of Otso, along with Marissa Limshako. We're available. We do this full time every day. Contact us at your convenience. We'd love to talk to you and your clients or anybody else in your firm. Thanks again. Have a great one.